Okie dokie. Hi, Lazaro.
And conversely, if you see a P, that will mean that's a pull-off.
Sherry, is that you?
Yes, it is. My internet is being upgraded, so I am online. This is very
Is it?
exciting. Very exciting. Yes.
Your phone number ends in 11?
Yes.
Okay. Thank you.
The meeting will come to order. Welcome to the virtual November 16th, 2020 special meeting of the West Hartford Pension Board. My name is Nancy Dean and I am chair of the board. Because independent in-person attendance at public meetings is likely to increase the risk of transmission of COVID-19, this meeting is being conducted in accordance with Governor Lamont's Executive Order Number 7B, which permits municipalities to conduct public meetings virtually. Members of the board and some town staff are participating by WebEx, and members of the public can view the meeting live on West Hartford Community Television or on West Hartford Community Interactive Comcast Channel 5 and Frontier TV Channel 6098 or at www.hctv.org. The meeting is also being recorded for on-demand viewing, which will be available on the town's website. Because of this virtual format, there are some special rules and procedures that I need to cover before I begin. First, I ask all participants to please mute your devices when you are not speaking. If you wish to be recognized, please raise your hand and I will call on you in the order I see hands go up. If you are participating via audio only or I do not call on you and the debate is ending, then please unmute your phone and let me know so that I may recognize you. Second, main motions will be made by me and no second is necessary. We will proceed immediately to debate. These include motions to adopt, receive, or approve business items. Subsidiary motions still require a second. These include motions to amend. A member must be recognized before making a subsidiary motion, but any member can second a motion by just unmuting their line and saying second. Third, pursuant to Executive Order 7B, all speakers must state their name and their title each time they speak. Fourth, because of the difficulty in tallying votes on a video conference, I will require that all votes be taken by roll, and Lori Carney will be assisting me in this regard. Fifth, a reminder that if any participant has a problem with their connection, you should immediately call Lori. She will let me know and we will recess the meeting while the problem is resolved. If it cannot be resolved quickly, we will ask you to call into the meeting using your phone and participate via audio only. I think the next sentence says we will continue to be patient, or I ask for your patience with this experience. I think that in the past number of months, we have done a fairly effective job at running the meeting this way, but I do appreciate your support. I will now ask Lori to call the roll.
Okay. Nancy?
Present.
Lazaro Guzman?
Present.
Ellen LeBeau?
Here.
Brittany Birmingham?
Here.
And Peter Piritera?
Present.
Sherry Cantor?
Here.
Matt Hart? I know he's here, but on.
Here.
Oh,
Thanks, Matt. Chris Kashmar?
Here.
Rick Ledwith?
Here.
Paula Kanaki?
Here.
And Jennifer's recording. Is there anyone participating or listening in that whose name I have not called? Okay. Thanks, Nancy.
okay. Thank you all, and good morning again to everyone. We have a very straightforward agenda this morning. The bulk of the agenda is regarding around Chris's investment review, quarterly investment review for us, but we do have a few order of business items. And with that, I would ask Pete, is there anything that you need to update us from the finance perspective?
Thank you. Pete Piritera, Chief Financial Officer for the town. Good morning, everyone. I just want to talk briefly about where we are with the pension obligation bonds, just to provide the board with an update. We finished briefing council members, and the next step now is, I believe, for the mayor and council and the town manager to have a discussion on what steps to take to move forward. This is the time of year when we start the budget process. It kind of sneaks up on us already. It's here. So I know that we'll be scheduling meetings in January, February. So I'm assuming that we'll have discussions on the town side regarding the POBs and make some preliminary decisions, because normally I come to the board with some recommendations on any changes we might want to make to the discount rate or any other changes that come up when I have my discussions with the actuaries. So everything's moving ahead, and I don't, I'll defer to the mayor if she wants to make any additional comments. Thank you.
Thank you, Pete. Sherry, did you have any other comments?
Yes, through you, Madam Chair. Yes, this is Mayor Sherry Cantor. A very good summary of the pension obligation bonds. It was an extensive review with the team, with financial advisor, actuaries, obviously our own staff, leadership, and the feedback so far is very positive. And we are going to proceed. So I would expect that you're going to, in the next, with December, January, probably January, hear about next steps in a timeline. So I think that's a lot of progress, and we will look and make decisions with that framework. So that's going to be really important. And as you all know, this is budget season never leaves, but it picks up. So and that's where we're headed. And these are really challenging times, and there's a lot of unknowns. But I think there's some really positive news too, that hopefully at the end of this fiscal year, we will at least be in a place where we see the things normalizing a bit. So thank you.
Okay. Thank you. Alan?
Yeah, Peter, are you able to give us any more details, like the dollar
Alan,
amount?
I'm sorry, could you just identify yourself?
I'm sorry.
That's okay.
Alan Lebo, member of the pension board. Peter, can you give us any details, like the dollar amount of bonds that's expected to be issued, or the length of the bonds, or whether there's different, will there be like 10-year bonds and 20-year bonds? Some of that.
Sure. Pete Piritera, Chief Financial Officer for the town. There are different options. Am I hearing that?
I heard it too.
Sorry. Yeah, I like a little background music.
Yes, that was very dramatic. Yes.
Right now.
Sorry, I'm late.
Find up the reward.
Okay. I mean, if we look at.
If I could interrupt, who just joined us?
Lee Gold. I'm sorry I was late.
Thank you, Lee.
Right. Good morning. Thank you, Lee.
If we look at the last valuation, I believe our unfunded liability was about $302 million. And the total overall issuance will depend on a couple of things. One is the actual time period that we're going to issue in. I mean, right now we're talking roughly 20-year bonds. We can go a little further if we want, but we haven't nailed down that piece of it yet. And again, just so everyone is aware on the process, it's a significant commitment by the town, and it has to be approved by the town council. Once the sale is complete, the money will be turned over, well, the money will be deposited in the pension fund, and then the pension board takes over with respect to managing those funds and making all decisions on how those funds are going to be dispersed and managed. So I just wanted to point that out because it is a significant commitment, and that's why we took our time making sure that everyone understood what was at play here.
So Peter,
Nancy, can I ask you a question? Oh, go ahead. No, go ahead.
and I'll leave up pension board. So there'll be one issuance, one period of issuance, and is it did I understand that to be roughly equal to the unfunded liability, and that's of 20-year bonds?
It's going to be greater the unfunded liability. I mean, that's just the principle. I mean, if I were to estimate, it could be 350, 375 million, depending on the term and the interest rate at the time of issuance. So there hasn't been a final decision on that yet because we're still discussing the options that we have.
Okay, thank you.
Before we move
Question.
on, did anyone, this is Nancy Dean speaking. Before we move on, do we have any other questions for Pete in this regard?
Yeah, one question, Lazaro Guzman. Pete, prior to the sale of the bonds, will we have an opportunity as a board to review the details and are we part of the decision or do we come in after the decision is made?
Okay, you will be provided with a review as to the process, but you are not, this board is not part of the decision. This board, again, once council authorizes the issuance, the town of West Hartford will issue the bonds.
Okay.
Once we receive the funds from the bonds, the funds will be deposited into the pension fund, and at that point, it'll be the responsibility of the pension board to manage those funds.
Got it.
And
Nancy, this is
Sherry.
Matt Hart. Whoops, sorry, go ahead, Mayor.
Sorry. Thank you. This is Sherry Cantor. We don't, we expect once the council determines the outline of how we're going to proceed, that we would come to the pension board to at least to get feedback. It's, again, not a vote that you would have to take, but we want to make sure that we're, looking at this is a big decision, and we want to make sure that we're doing everything in a thoughtful way and making sure that there are no potholes that we don't see ahead. So, Matt, through Nancy.
Yeah,
Right.
thank you, Mayor, and through you, Madam Chair, Matt Hart, Town Manager. So the Mayor just touched on the point I wanted to make. I know it will be important to the council to seek input from this board. We understand that this is a very, very significant decision. Peter, I think in your explanation, you often touch on where we were when you started with the town and compared to where we are now. And I think it'd be helpful if you could just very briefly touch on that history.
Okay. Pete Piritera, Chief Financial Officer for the town. About 8 years ago when I started, the town's funded ratio was about 45%. And that was 8 years ago. And every year that I've been here, we've made the right decisions. We've gradually reduced the discount rate. We've accepted various, changes in mortality tables. We've made every actuarially determined contribution that was recommended. We've made them. We've done everything that we could possibly do. And now we're at 41% funded. So it's, it's a situation like we're doing everything we can, but we're running in place. And that's probably one of the most significant reasons why we're pursuing this, or it appears that we will be pursuing this, as the mayor said, because, this will allow us to fully fund the pension liability, but it'll also allow us to save some money because we'll have a fixed rate on the debt service side, and the interest rates will be far less than what our assumptions are on our discount rate. So again, we've made all the decisions that we needed to make in the past, but because of the changes in the economy and various other changes, we haven't been able to make any headwind against this.
Thank you, Pete. This is Nancy, Dean Chair. It's always good to bring things back into perspective when we're looking at a huge undertaking such as this. So I appreciate the clarity that brings for us. Also reminds me that I've been on the board now during all that period of time, so I share in the frustration of kind of hovering as opposed to making big positive progress. Before we move on to Chris, any other questions for Pete, since I can look around the room here, our virtual room? No. All right. Thank you, Pete. We appreciate that. We do not meet again until January, so we'll look forward to an update then, or if anything of any significance prior to then, I'm sure you will keep us informed. So thank you. Chris, you are our gentleman of the hour here, so welcome. You have lots to tell us, I think, right?
Good morning, Madam Chairman. Good morning, everyone. Chris Cashmore, DeMail Schneider & Associates. Good to see folks. I think we had hinted at and previewed some of the third quarter results in October, and we do have the benefit this morning of the full quarterly report. And I actually have, while not fully vetted just yet, I do have some flash October numbers we can share as well as part of the conversation. I have to confess, Lori, I don't remember. Have we been sharing screens and bringing the deck up, or do people want to just follow along in our attachment to your materials? What works best?
We haven't shared the document on the screen in the past.
And that's fine. I trust that folks have access to the slide deck that Lori sent around, and if in fact that's the case, if you would jump into that deck, we'll hit some of the highlights for you. So it's interesting, just on the heels of Peter's history there. This is the quarter, if you jump to page 4, where we offer up some summary context in terms of comparatives at a high level actuarially across the state. And then jumping right to page 5, you'll see there are a lot of information jammed onto the page, and we go out, our team goes out and surveys CAFRs across the state. And you can see there we've got a fairly large cohort of responses and data. And then we start to tease out just some broader trends of kind of what we're seeing and at a high level where the town compares. As Peter just alluded to, I don't think our motivation this morning is to spend a ton of time on funded status. We all know what it is, but you do see there in the upper left-hand corner, just for comparative sake, where from a statewide basis, those ratios average, and obviously the two largest cohorts, maybe not obviously, but the two largest cohorts between 70 and 90% funded, with a statewide average at about 75%. These are numbers, just as a reminder, from a fiscal year 19. So for the period ending June of 2019. You've also, as Peter indicated, I think been very thoughtful about reducing the discount rate. You see in the upper right-hand corner as well, those similar actions and trends persist statewide. It wasn't too long ago, right, where there were lots of municipalities at 7.75% and even north of there, as you see indicated in the graphic. And clearly the direction is to bring those numbers lower through time. Again, the statewide average today, I think at 19 anyways, hovered at just about 6.75%. And you've made headway on that front as well, right? So those are just kind of two things to give you a little bit of color and perspective on statewide averages.
Chris, this is Nancy, Dean.
Sure,
just
Nancy.
a quick question. When you do that percentage, and I might have missed your saying this, is it by total asset values or just number of plans?
Which data point are you looking at? I'm sorry.
The discount rate.
Yeah, I think it's by number of plans.
Okay. So it doesn't.
Yeah, it's not weighted or anything. I think it's just simply an observation where those numbers are tallied.
Okay,
where the respective cohorts fall, right?
thank you.
So no surprise, right, that the bulk of the
Right.
state today, when you survey plans, is somewhere between 6.75% and 7.25%. The what is that? The gold, I guess, the gold
Right,
cohort,
gold bar, yeah,
upper right-hand corner of the page.
Yep.
The other thing that we keep tabs on, of course, right, if you kind of switch gears to the other side of the ledger, if you jump ahead to page 6, it occurred to me we probably should have done this in this exhibit, but we don't. So I'm going to provide you a couple of numbers just to give a sense of the lift that the assets are providing through time. You see down there in the bottom half of the page, the very first bullet there that describes returns for fiscal year ending 2019, and then the 3 and 5 year numbers annualized that ended that same date. So you see 5.7, 7.9, and 5.2% respectively. I took the liberty last night. I went through and looked through the second quarter report for the town plan, and the comparative numbers for fiscal year 2019 were 5.4%, a touch lower in the 19 fiscal year, but in the 3-year time horizon, the town had annualized at 9.3%. So well ahead of that 7.9% number statewide. And then moreover, on a 5-year basis, you see a 5.2%. Actually, the town had done 6.4% annualized over that same time frame. So a bit of a tailwind, at least from an asset perspective, over that more limited window. But I think an important additional context nonetheless. We don't control for asset allocation here. I'll be frank about that. But if you look at the town plan today, at what is it, about 70% equity thereabouts and 30% fixed income when you do the arithmetic, that is largely and broadly representative of what you see statewide with mature systems. So I don't think you're too far off from an allocation standpoint. So I think kind of good outcomes there. The visuals, just finally, Peter, again, already referenced these. We pulled them, just simply from the latest val on page 7. And again, I don't know that we need to spend a ton of time on these numbers. Excuse me. I know they're all familiar to folks. Let me pause there for just a minute. Any questions or thoughts or concerns? And again, our intent there was just to provide a high level, kind of a quick snapshot of things, but happy to delve further into this if the board would like. Sounds like folks are okay.
looks that way.
Okay, well, let's forge ahead here. We are keeping tabs on page 8. Just quickly, no pertinent updates other than that Wells and Principal continue, I think, to make good headway in terms of the integration of those two operations. You all remember that Principal buying the retirement business of Wells Fargo, the custody business, and that transition is kind of going in good order. And we'll continue to report back as needed. I know, Peter, I think that folks there at Wells are periodically reaching out to you as well. Interestingly enough, Principal has decided to adopt the Wells Fargo legacy infrastructure. Things are going according to plan.
Good.
If we jump ahead to page 9, we'll see there, just to cap again the quarter and what's going on in terms of market events. We're using equity returns here as a proxy for really just risk sentiment and appetite in the markets that continues to be largely constructive, as you can see, with global equity returns up about 8% for the quarter. Particularly June and July, very strong results, as you see there. A little bit of a tail off in September by virtue of some concerns around the technology sector, which, as you all know, has kind of been the leader. But good results nonetheless. And if you jump to for the quarter on the heels of the very strong second quarter, as you know, and if you jump to page 10 in the slide deck, you'll see there just the visuals more broadly on what transpired from a return standpoint. The numbers admittedly are small, but you do see there in kind of the left-hand column in the middle of the page, pretty solid returns globally for equities, overseas as well. So there's continued to be appetite for risk. It emanates really from right? A couple of things that continue to drive sentiment at a larger scale. Certainly the status of the pandemic, good and bad, right, has weighed on investors. More good in the sense that we've had the inordinate amount of stimulus that's been talked about, and clearly an expectation from investors that more is forthcoming. And then we've seen more recently, of course, some of the news on the vaccine front. So those are kind of the larger guideposts that continue to guide investors, and a bit of fits and starts, and we expect that volatility to likely persist here as we kind of work through developments on those two fronts. Interest rates, as a final takeaway on page 10, were reasonably well behaved in the quarter. You see positive returns for fixed income markets, but fairly nominal. Certainly the broad markets, fairly nominal return there. But interestingly enough, that appetite for risk that you saw with equities broadly clearly existed in the fixed income arena as well. If you can make it out there in the upper left-hand corner of the page, you do see high yield bonds, for example, up meaningfully more than the broad fixed income markets as investors continue to strive for take risk and strive for return. I'll go quickly here on page 11 because I do think we talked a little bit about this at our last meeting, but just a couple of broader economic data points and background information. The purchasing manager composites in the upper left-hand corner of the page, which have become kind of very popular among investors and kind of broad indicators of just the fate and potential for the economy. You see there, those numbers kind of dipped down into contraction phase, if you will, below a 50 reading, which is the way this metric works. And then you see the recovery from the spring as things started to, I dare say, cautiously improve or stabilize a little bit. And you see those numbers globally start to work back up to indications of a very modest expansion, but expansion nonetheless. Upper right-hand corner of the page, right, we had the manufactured recession in the spring. We will have a negative year for global GDP and for economic activity more broadly, certainly, but there continues to be this notion that as we turn the corner into 2021, get more stimulus perhaps, hopefully, God willing, good outcomes on the vaccine front and perhaps setting the table for increases in economic activity on a go-forward basis. Inflation continues to be very well behaved, right? We get lots of questions from investors around all of this stimulus is going to elicit inflation, is it not? But you have not seen that indicated just yet in the lower left-hand corner of the page. Pretty darn well behaved, all things considered. Many of you may have heard again, I think we talked in October that the Fed is repledged again their intent to be fairly patient with inflation and even let inflation run a little bit north of its 2% target, longstanding target. So we don't think inflation will be of immediate concern. And then the Fed still does have capacity to do more in terms of the monetary stimulus front, as you see in the lower right-hand corner of the page. Their balance sheet has grown certainly through time, but it does have the capacity to grow even a bit more if in fact they needed to take those steps. So that does paint a picture, at least on the margin, of a little bit of stability and hopeful kind of positive expectation, and that has kind of worked its way, as we've talked about, into since the first quarter, relatively strong numbers in the capital markets. Any questions on the broader economy from folks? If not, I will go quickly here because we do want to get to the portfolio and be mindful of time. On page 12 of the deck, you do see there just a quick update on equity markets globally. We've talked in the past, right, of where valuations are. U.S. markets have done much better, until recently have done much better than their international counterparts, and that, of course, is reflected in valuations. As you see in the upper left-hand corner of the page, and valuations today in the U.S. markets are fairly full, less so overseas. It has continued to be a story, as you know, in the U.S. markets with the glamour technology stocks, by and large, leading the way. And you see that indicated in the upper right-hand corner. Just a handful of names have led that S&P index higher in the 2020 calendar year. And so the breadth of the markets has been fairly narrow, although it has started to broaden out just a touch more recently, particularly in the fourth quarter. If we jump ahead to page 13, just a point or two on the fixed income markets. We've talked about this in the past as well, if you remember, in the upper left-hand corner of the page. Interest rates continue to be extraordinarily low. You see base treasury rates there, the yield curve, and at the point in time at the end of the quarter, 68, 66 basis points thereabouts for 10-year yields. They've since drifted a little bit higher. Why that's important, of course, as you all know, is that those yields provide context around what the return potential for fixed income is on a going forward basis. And as we know, the broad fixed income markets today yield about 1.3%. That may be a pretty good proxy over the next couple of years of the return potential for fixed income. So something just to be mindful of. And certainly the manager, Matt West, that we use in the program, as you know, is mindful of that as well. The general takeaway here, otherwise visually, I won't go into all of the gory detail, but that appetite for risk I mentioned earlier that exists for equity was on this full display in fixed income as well. And you see that with where spreads have gone and in the upper right-hand corner, just in terms of the different sectors performed in the quarter. If we jump ahead quickly, I think what I might do in the interest of time, because I know we get a lot of questions on it and everyone is always interested in how to think about it, on page 16, right? We all want to know what's better for markets. What is an election outcome that's better? And the frank and honest answer is there really isn't any distinguishing, other than markets seem to like split outcomes politically, right? They like to have political persuasions in the executive branch be different than the legislative branch. And that historically has been set the table for best returns. But I think we all agree and know, what happens in markets is a byproduct just fundamentally of the economics, where we are with valuations, where we are in the economic cycle, and prospects on that front. And that really ultimately is much more telling and influential on capital market returns than what may happen in an individual election. And I know that's not the answer, right, that we all want and like to hear, but in fact, if you tease and look at the data, that's in fact what happens. So elections are interesting to talk about, but at the end of the day, it's the economic metrics and fundamentals that drive things. All right, that's probably plenty on the update front. Before we transition into the portfolio and look at a couple of numbers, any questions from the board just broadly on markets or the economy? No, sounds like folks are good. So I know we had seen these numbers earlier quickly at our previous meeting, but if you jump to slide 18, you've got the display of the assets at the end of September. See there about $225.8 million or thereabouts, right? So the portfolio does continue to elevate in absolute size, no surprises. Given what we just described in the markets. And you do see there as well, if you look at the two columns in the middle of the page, allocation versus target. You'll remember back at the previous meeting or two ago, the portfolio was nominally overweight domestic equities. And you'll remember that the board took the action of trimming that overweight, deploying those assets back into fixed income just to stay attuned to the target weights. That was done back, you'll remember, in the middle of September. $5 million was taken from domestic equities and dispersed across the two fixed income strategies. So I think the portfolio is in pretty good working order from an allocation perspective, as you see there, and no recommendations for the board this morning. And just the other, it's because it's a convenient place to do this, just another affirmation for the board this morning. We do have the totality of the roster of managers you see indicated in the left-hand column there, of course. on watch, on maintain, excuse me, on maintain. Yeah, the entire roster is on watch. It is not.
We're
Seeing
just making sure we're all paying attention. That's good.
right. It's not maintained, in fact, all the managers. So I think we're in pretty good working order up and down the lineup in terms of managers being positioned and kind of performing consistent with expectation. So that is a couple of quick data points on application in terms of performance. And again, I know you've seen these numbers already, but nonetheless, for the record, certainly on page 19, you'll see in the middle of the page there, the portfolio was up just about in line with the benchmark for the quarter, about 5.5%. You see a year-to-date number in line through September. You kind of sit here today, right, and you would have thought back in the throes of the crisis, it would have been hard-pressed to think we'd be posting positive numbers in the portfolio year-to-date, given how detrimental that first quarter was in markets. But lo and behold, the portfolio is up year-to-date, as you see there. And then on a one-year basis through September, you see up just about 10%. For the 1 year number. They're not displayed on this page, but just as additional perspective for the board, October in markets, as you know, was a touchdown in both equities. Fixed income kind of moved sideways. These are numbers you can write down. We're kind of fully vetting them and finalizing them, but nonetheless, we had the plan down in October about 1.2%. The broad markets were down about 1.5%. That brings the year-to-date total through the end of October calendar year 2.5% versus 2.1% for the broad markets. And then a one-year basis through October, we've got the plan up just about 7%. The broad markets over that same time frame are up about 6.3%. So the managers are kind of holding serve here through a little bit of that more recent volatility, as we mentioned earlier. And then,
hey, Chris, can I ask you a question?
Sure, Lazaro.
Chris, Lazaro Guzman.
Yes,
on page 23, just kind of when I look at the returns and on a previous page, I know on the large cap part of the portfolio, it seems like we're a little bit overweight value. So our main holding is the index, but then we have an allocation to the T row large value. I know we've gone through this extended period of value underperforming growth. You can see kind of longer term, even in the 5-year numbers, the T row, underperforming relative to the total stock market index. Just not necessarily looking to make changes now, but just maybe asking your thoughts long term, this slight overweight to value. And then also when we look at the returns versus the benchmark, pretty even in a lot of cases, lagging the benchmark a little bit. So maybe kind of longer term, are there opportunities, additional opportunities to index more of the portfolio? To potentially, kind of bring the future performance closer to the benchmark. Not necessarily asking to index everything, but just maybe kind of reevaluate where we're indexing, where we have active management, and does that still make sense?
That's a great question, Lazaro, and a couple of, if you'll grant me a kind of a multi-tiered answer here, and I apologize doing this to the board. If you run back to, we skipped over, but if you're back on slide 17, you'll see our investing viewpoints. We continue to have a modest preference for value versus growth domestically. That is obviously right, not paid out. I'd say that not paid out until the fourth quarter this year, because as you, I think, all know and maybe are alluding to, value is dramatically outperforming growth in the fourth quarter, quarter to date, I should say. And some of that is the broadening in the market that we talked about earlier. Some of that is reflection that perhaps the economy's poised to kind of, work into that next transition of growth and stability. Early in economic cycles, as everyone may remember, value tends to outshine growth. And we're seeing that teased a little bit in the fourth quarter to date. So you might remember, Lazaro, that was kind of a conscious, I think, a standout into value using the T strategy. And again, right, it just starting maybe to be rewarded now. So in terms of that kind of positioning, I think it's consistent with our best thinking. The other thing here is a little more technical, but something you talked about in the past, and I'm looking at page 18. Just again, you'll remember we do have, versus the structure of the index we use for domestic equities, the Russell 3000 index, you do see that we do have a little bit of a conscious step into smaller cap names, right? 8% part of 43.5 you see there. So it is a higher weight than small cap exists in the broader market. And why is that? Again, remember, it's because over time, generally small cap stocks offer up higher returns than large cap names. Again, not something that's transpired more recently, but something you expect over longer periods of time. So that was another kind of conscious decision to try to improve the return profile of the program going forward. It brings me full circle here to just one final thought on this front, and then just redirect me if you need more or don't like the answer. We will be doing next quarter for you our full-blown asset allocation analysis with the benefit of our latest capital market inputs and updates. So I think at that time, we'll be able to show you pretty discreetly return potential and kind of some of the levers around that, if that makes sense. So is that Lazaro? Does that help at all or no? Or
Yeah, no, that helps. And then maybe as part of the asset allocation, just kind of maybe take a fresh look at, again, where, your thoughts around where we're indexing, where we have active managers, and do you still think that it's appropriate? Do you think maybe we should continue to shift towards more indexing? Really just kind of looking at a refresh of your thought process there.
Yeah,
But not
absolutely.
necessarily. Yeah, I think when you do the asset allocation, that might be good at that point to kind of have that discussion.
This is Nancy.
Excellent.
I think that would be an appropriate time to take a look at that. So Chris, I don't know if you'll be ready to do that for January, but certainly in the February meeting, because I think as we as a board look forward to what might transpire relative to additional funds coming into the portfolio, we need to be very attuned to what our best thinking is in that allocation regard.
Yeah, no, absolutely. I think that's great guidance for us. And if folks will permit us, I do think, Nancy, that's probably a February meeting task. I think our meeting in January is the 11th, right? So
it'd be a little early, yes. But we should still keep it on the horizon, I think. And thank you, Laz, for bringing that up.
Yeah, no, it's a great question. The other guidepost, right, that I would offer up that we haven't talked about, the portfolio today, just as a reminder for the board, because it is something we're certainly mindful of in terms of expense bearing, if you will. On slide 38, if you were to skim back to that, you'll see there just the investment related fees associated with the program. You do have a lot of indexing, right, which we think is important and appropriate in areas of the market where it makes best sense. And you see 33 basis points on a weighted basis for investment for manager fee, which I think compares pretty favorably to what you see statewide, right? I think generally for a portfolio your size with the general orientations and manager selections, that number more typically is probably in the low 40 basis point range. I do think there's a little bit of an innate advantage there. Investment expense as well. And we saw that bleed through those 3 and 5 year numbers we talked about when we looked at versus averages. All right, so I have jumped around here a little bit. That was a great question. I think if the chair's okay, that's really all we had prepared. Comment and update, but happy to do more if folks would like.
Okay. Any other comments or questions for Chris from around the virtual table here? No. Okay, then Chris, thank you very much.
Thank you.
Appreciate this. When I first opened up your attachment and saw it was 73 pages or something like that, I said, oh, I have to figure out a way to do this without printing the whole thing. I did. I borrowed my husband's iPad. That's what I did. Okay. Thank you. Brittany, regarding town matters, any updates from your perspective?
Nope, no updates.
No? Okay. All right. Thank you. Rick, we'll move forward to, I think you have a couple things for us.
We do. Morning, everyone. Rick Ledwith, Executive Director of HR. We have our meeting schedule for 2021 on page 7 or 6B. So our next meeting is January 11th of 2021. Whether we'll be in room 407 at that point, we'll see how this pandemic unfolds as we move through the holidays.
That's right. I see a question from Alan. Alan? Did you raise your
I
hand?
think you could probably anticipate what the question was. As has been in the past, January 11th is kind of difficult for me. If it's possible to make that January 18th, I would appreciate it.
Is that a holiday, January 18th?
Yeah, let me take a
How is it?
It is. It's Martin Luther King Day. January 18th is.
Right. So, town hall will not be open, Alan,
Okay.
on the 18th.
I could shift it to the week out, but then I'd probably want to adjust the rest, for the rest of the year, just to space them out.
All right. Alan, would it be, would you be able to participate for some amount of the meeting, or is it I know you're in your year-end closeout. Is that your challenge?
I mean, it'll be difficult. I'll attend what I can.
Okay. All right. We will do our best then. Thank you.
All right. Thanks.
I'm reluctant to start moving the calendar forward into the year, given the other things that we have to do here. So,
Yep.
And I can, you and I can talk ahead of time, and I can reorder the priority of the agenda if that helps from any perspective as well.
I appreciate that. Thank you.
Okay. All right. And I think at one point I may have referred to making a vote on these meetings. I don't think we ever do make a vote. That's why we bring the remaining schedule to every meeting for the year's remaining schedule. So at this point, again, if there's any other meetings that folks see further out into the calendar that they have a problem with, if you could just let Lori know, then we'll work on any accommodation. Okay. Thank you, Rick. We now have the formal section of the meeting. So we have the minutes of the meeting of Monday, October 19th. I will make those minutes were distributed in your package from Lori. I would make a motion to approve the minutes for the virtual regular meeting on Monday, October 19th, 2020. May I?
I'll take a vote.
Yep. Yes, please.
Okay. Peter?
Yes.
Brittany?
Yes.
Alan?
Yes.
Lazaro?
Yes.
And Nancy?
Yes.
Motion carries.
Good. Okay, thank you. And pension administration, Rick, we've got a couple things in here. Anything of any a note that you want to bring to folks' attention?
Nope, just a very light portion of the administrative approvals this month. We have 15 new members, 1 early retirement and 1 normal retirement.
Okay.
Thank you.
Better than those meetings that we had lots to catch up on. So
Yes.
I would then make a motion to approve pension administration as presented by Rick.
Okay. Peter?
Yes.
Brittany?
Yes.
Alan?
Yes.
Lazaro,
Yes.
and Nancy.
Yes.
I'm sorry, Nancy.
I said yes. Thank you.
Okay, motion carries.
All right, thank you. No bills to pay at this point. Any new business from any of the members of the board to bring forward at this point? No, no one's raising their hand. Then I would say before I call for a motion to adjourn, I would thank everybody for this very unusual year. We won't be meeting again until 2021, and I think as Rick or Chris or we've all referenced, hopefully we might be able to meet in person, but I'm not sure. So we're getting the hang of this a little bit more so than we did for that first meeting back in April. But I thank you all for a good year and a very happy and hopefully healthy holidays ahead. And with that, I will make a motion to adjourn the meeting.
Okay, one more time. Peter,
Yes.
Brittany,
Yes.
Alan,
Yes.
Lazaro,
Yes.
and Nancy.
Yes.
All right.
All right. Thank you, everyone, very much.
Thank you all.
Morning.
Thanks. Bye. Thanks,
Bye.
Chris.
Thank
Bye.
Thank you, Miss Mayor. Thank you.